Okay, hello everybody, and welcome to another edition of the AlgoDynamix Podcast Series. Depending on your location, it's either a good afternoon or good evening or good morning. And as a reminder, there will be a replay. There's a recording. This is being recorded, and there will be a replay available in case you cannot attend live or if you want to listen to it again, actually. So there we go. Just before we start introducing and doing a quick audio check, we will be talking about hedge funds, regulated products. They are not available to everybody. I think in the US, it's accredited investors only. UK, it's definitely not retail, and other jurisdictions as appropriate. So please keep this in mind, that we are not soliciting, we are not advising, we are presenting a case studies on hedge funds and crypto and many other exciting topics. So that's a bit of context. And as always, please do use the chat box or the Q&A box. The first half will be very much ourselves, and the second half will be over to you. So if you've got any questions, any comments, or if you want to speak, you can raise your hand. So that's the format for today. So that is great. So first things first, we'll do a quick audio sound check for Canada. So Tarun, is this working? Can you hear us?
Yes, I can, Jeremy. I can hear
Brilliant,
you.
actually. And then Tarun, just remind us where you are in Canada. I think that's always.
Jeremy, I'm based in Toronto, Toronto, Canada. Yeah.
Nice enough, actually. And our guest star speaker. So, Eric, is this working? Can you hear us?
Yes, I can.
Good, actually. And Eric was telling us it's about 100 degrees Fahrenheit in Texas, so that's 37. So are you having a good day, Eric? Yes.
Yes, I'm having a terrific day. Yes, fantastic.
Love it. So, Eric, well done, and thank you again for joining us. These events are always very insightful. So I'll just do a bit of a sort of a slight history, because Eric, I think you started quite a long time ago in financial markets and trading, and I think it was in foreign exchange, right? Is that where you started and you did your grind? If that question makes sense.
Yes, that's correct. Yes, it's been 14 years ago. I began in Forex, and Brilliant. It was it was kind of painful. Yeah. The beginning, it was in Forex.
It's always painful in the beginning.
Forex is tough.
It is. Yeah. And I guess you evolved, and assuming it was predominantly towards technical analysis. Is that your journey? Is that your roadmap? What does it look like if you?
Yes, that's correct. For technical analysis, in doing pretty much that, all the astrology of the charts and and the alchemy and analysis and all those kind of things. Yes.
Okay. I have. Yes. I mean, in defense, actually, back in the days, long time ago, probably when you started, yeah. I was helping traders. So some parts of technical analysis, support, resistance, everything else, definitely validity, right? So I think it's
yes, yeah. And I'm just joking, but I still they have some very good tools, yeah. I know we still kind of use a couple, of course.
No, I think, but case by case, that's been my experience.
Yes, but mainly only a couple. Yes, but not for decision, to take the decisions, anymore.
It's okay. So support tool. I think we've been there. So that's it, actually. So that's okay. And then good evolution. And at some point you saw the light with crypto. Is that a fair statement, Eric, or how did that happen? Yes.
Yes, crypto is just a fantastic. Let me call niche for the financial markets, and it's been growing. It's been growing a lot, and we see as that will grow and is going to double. On my view, it's going to double in the next 5 years.
I might go beyond, even shorter actually, but 5 years. I think nobody's going to disagree with that, right, Eric? In terms of
Yes, but I have this optimistic view that's going to double the size in the next 5 years.
Easily, actually, and then you're quite. I guess we had a short chat before, but I mean, all the cryptos. I mean, we've got our top 10, top 20. Do you see anything major happening in the Bitcoins and the Ethereums and the XRPs? Well, what is your sort of gut feeling in terms of relative market cap and evolution of these different cryptos?
You mean in terms of a particular coin, or in terms of generally speaking?
Generally, because I mean, Bitcoin is currently the dominant, which I think it will stay, but Ethereum close second, whatever's close third. Do you think that those relative rankings will change, or no immediate?
I think it will. I think it will.
Okay.
And I'm gonna be bold here.
Go.
Well, Solana is gonna surpass XRP.
Okay. Yeah.
I don't know when, of course, but it will sooner than later, sooner than we think.
Yeah. Because I mean, it's the gas fees getting a bit technical here, but it's the fees you pay to transact on chain.
The fees in the and also the creation, on top of the chain. It is just the more our research and the more we dig, the more we see how things are going towards the chain, the blockchain.
Okay.
So I see that as a major shift. So so I see Solana as on.
Yeah. Okay. Very interesting. I think just once again, just explaining for the listeners, every time you transact on the blockchain, there's a fee essentially, which goes to the miners, and the Ethereum fees have been Ethereum and XRP for that matter. Actually, they're just not very competitive, are they?
Oh yeah, XRP. You don't see any pretty much on XRP. You don't see pretty much any fees. I mean. You see, just a small fee, just pretty much. Anyway, but on Solana,
it's Solana. Just getting quite technical here. Solana, it's the ecosystem, isn't it? It's the stuff you can build on top, which I think is not the case with XRP. Eric, is that?
Yes, that's what I'm trying to say, and also the point that I'm trying to make is. The creation of applications on top of the blockchain, either DeFi protocols or games or transactions or you name it.
Makes sense. We'll come back to that actually a bit later, but I think maybe just sort of sticking to where we are. So in addition to trading, and I think it's official now, right, Eric? I think we could be quite public about your hedge fund products, but that's going extremely well, right, Eric? There's a website with some of the numbers, but I mean, maybe just sort of high level, Eric, just give us a quick short overview of what you're doing with your crypto hedge fund.
Yes, we're based here on Texas, Dallas, Texas area. And we use AlgoDynamix.
Thank you for the plug. Thank you, Eric. That's very kind of you.
Services, and we are pretty happy with the service. And but we have some twists, okay?
I think that's just summarizing. So, we do provide global services to people like yourself, but I think the twists matter. I think, Eric, that what you've done, what you've implemented is truly remarkable, right? If that's a fair statement.
Yes, and I think that the freedom that we have a freedom to you trigger the signal, but we have the freedom to do whatever,
Absolutely.
As the fund manager, we can do whatever we want. We can call, or we can buy, or we can sell, whatever. But the point that I want to make is, I was talking to Tarun the other day, as I was analyzing. Because the first of all, I went to the research, and I was going, okay, I gotta analyze the signal,
Yes, good.
Because my mind works as I don't consume anything before I read I gotta read the specs before I consume anything. So we were trying to kind of unpack your signal, not trying to mock or anything of the story. We were just trying to understand, trying to understand, to improve to our partners, and to deliver a better ROI, a return of investment. Anyway, what I'm trying to say is that the signal is pretty much triggered when there's most of the time when there's a low volatility, and that's the beauty of the signal. There's a low volatility, you trigger the signal, and then there's a spike on price. Okay, and I'm going, okay, how can we maximize the return on investment? Okay, so how can we bring more juice or more meat to this to the signal?
Is it cattle beef? Come on, Eric. What
yes,
are you thinking?
Yes. How can it be more beef? How can it be mustard to this? And then, and every time was pretty much the same pattern. The low volatility, and then here comes the signal, and then there's a spike, and there's a spike on the volatility, and then there's this beautiful gain, beautiful return coming from you. And I say, okay, so let's go to the options. Can we do options? Yes. Okay, of course we can do options. We go to the ETF, we can buy ETFs, we can buy Ethereum, we can buy Bitcoin ETFs. And I'm going, okay, so we can do options on those. And I'm going, okay, my first thought was, okay, can I do leaps? No, I cannot do leaps, because if I do leaps, they are long term, and the signals, they are usually for a short term.
Yeah. Okay. Is it, Eric? It's just probably worth taking a slight step back. So options are sort of, they're financial instruments with a limited risk, I would say. Is that a fair description of the options on the ETFs? How would you sort of describe the practicalities of the use cases of the options?
Yes. The option is like, okay, let me do if I would do an analogy, okay?
Yes.
Okay, so if you buy a stock directly, it's like buying a car, okay? It's a big investment, you have an unlimited upside, but if you also have a significant risk if the price crashes. So just buying a single option is like renting a high-performance sports car.
And that's the point. It's renting, isn't it?
Exactly. It's renting a high performance sports car. It's much cheaper than buying, but you get the thrill of the upside.
Yeah.
Okay.
Love the analogy. Love it.
Yeah, it's the thrill. But there is the rental fee. Okay, the rental fee. That's called the rental fee. The time is called the time decay.
Yeah.
Okay. In the time decay, they keep constantly ticking. So they keep constantly ticking. And they just constantly tick. It gets expensive every day. Okay. So what I decided to do on the leap, if you buy a leap is a long-term call option. Okay.
Yeah. Okay.
I said, well, the leap, it doesn't bring, because I was accustomed to buy leaps and so forth. I said, well, a leap doesn't make any sense because usually AlgoDynamix signal is a short term between 7 to 15 days. It doesn't make any sense. But I said, well, what if I do a short term?
Yeah.
So I decided to do what they call a bull call spread. Okay.
Ooh, okay. Keep going.
Yeah. Okay. Yeah.
Okay. Keep going.
So a bull call spread is like finding a massive. I'm going to bring the analogy to this bull call spread. Okay.
Yeah.
So it's like finding a massive discount coupon for that sports car rental.
Ooh, okay. I like where this is going. Okay.
Yeah. So you pretty much get the almost all the performance and excitement, but your upfront cost is dramatically lower. Okay.
Yeah.
So there's only one catch. Your profit is going to be capped.
Okay.
At a certain point.
Yeah. Okay. So just to summarize, so very small upfront fee, which is your only risk, but the price, I guess, is you have a capped profit then, is it?
Yeah, but here's let me go. Let me keep going, okay? But so it's capped, but so the if you buy the stock, you can go 20, 30, 40, 50, 100, 100%.
Yeah.
150, 200% on a stock, okay? Yeah. Now, it's capped, but I didn't say how capped it is. Okay.
Okay, good. Keep I like go. I like
okay. So you get to ride the car, the fantastic ride for a fraction of that price. Okay, you got the point.
Yeah.
So I can go to the mechanics, so your audience can implement, if they want, the mechanics. Okay. So the idea was, and I was going, okay, so how can we implement this idea? So you buy a call option at a certain price.
Yeah.
So this is the main bet that the stock will go up. Yeah. Okay, this is number one. And number two, you immediately sell another call option at a higher price.
Okay, yeah.
So the money you collect from selling that second option is going to act like an instant rebate.
Yeah.
Okay. Yeah. So it's going to lower the cost of the first option that you bought. Okay. You got it? So the small upfront net cost you pay is the absolute most you can ever lose on the trade.
Yeah.
So you have.
And then what's the magic then? The magic is you pay a bit, but the cap is wherever your second option is then, right, Eric?
Yes. So the cap, so you have a defined risk. Okay. Yeah. That's the most important thing. As a fund manager, you have a defined risk, which is the most important thing. The risk is strictly limited for the small initial cost. Okay. There's no surprises. The second thing is the high return of investment. Okay, even a small move, which is usually what we get usually from your signal is between 3 to 5% move.
That's right. Yeah.
It translates to, and listen to this, it translates into 25 to 50, sometimes to 100% on return on that investment.
This is madness, Eric. But
it is madness. It's all about capital efficiency, you know.
Yeah. Okay. Amazing.
And also, what happens is the theta is the time decay.
Yeah.
Since you open a call and also a short, the time you open like a cushion of protection of this time decay, you know. So you don't have the problem of the leap, and you don't have the problem of a single option call.
Yeah, makes sense.
Does that make sense?
It does, actually. Absolutely staggering. And you know, looking at some of your numbers, you've put a bit on your website. You know, absolutely staggering. And once again, just for the listeners, just to reiterate,
this is all for educational purpose.
Exactly, okay. And the risk is capped up front. I just want to be clear about some other methods can be a bit dangerous in terms of exposure, but you know, you've clearly capped your upfront risk liability here, right? Which I think is the really
exactly. And then you can cap define the risk, because you can use a small portion of your capital.
Yeah. Very, very efficient capital then. So.
And then you can even, which sometimes I do, put your expiration date for more than 15 days.
Okay, which is probably a bit more expensive to buy, to sell, I guess. Yeah.
It is likely expensive. However, if, for example, the signal, which is okay, not all signals are perfect, you know. What happens quite often in the market, you know, you have those big hedge funds. They go in and they kick out all the stop losses, you know, and they go down and they kick all those people out, and then they spike up. Does that make sense? So I stay in the market. I stay with my positions still open, and then I capture the upside.
Amazing, actually. There's this one quote which I found so true. I was back in the days I was manually trading, actually. The market will move in the direction that causes the most pain. We've seen this, right, Eric? I remember back to my manual discretion day trading days, but God, they will move just. I don't know if it's. I'm not sure. I don't know if it's the stop loss hunting, but it's always in the most painful direction, isn't it?
It does. On my experience, they often trigger. Not often, but quite often. I mean, they do kick a lot of people out.
It feels like it. I don't know if it is, but I'll stick to that quote. Whoever said it, you know, the price action will cause the most pain, right? It will take the direction of the most pain.
And then they go and they keep, and then their signal works, you know.
Oh, we're robust. Longer discussion about how we generate our flag signals in terms of order flow, actually. But yeah, robustness, definitely robustness. So, Eric, we could. I know we could go.
Let me explain. Let me give you one.
One exact. Go.
No. Let me alert your audience about this. There's one caveat. And I said at the beginning, this strategy works pretty well when there is you go to the option chart, and then there's everything. There's the delta, there's a gamma, there's everything, implied volatility. When the implied volatility of the asset is probably low or below 50%.
Okay, so I'll just translate this for the equity guys. So I guess it's not quite the VIX equivalent, but there is I forgot what it's called in crypto world, but there is a volatility index, isn't there, Eric? Which I think is what you're referring to. Is that correct?
Yes. Okay. Yeah, because there's the risk of a volatility crash.
Yeah.
If you open that, and when the implied volatility is too high, and then that goes up. Okay, the price goes up, and then you close. When you're closing the position, there's a volatility crash, and you can lose money.
Yeah. So just looked it up. So it's CVI in crypto land for everybody. So that's the volatility. So you need, and once again, just shamelessly promoting our products here. The flags, that's what they do. The signals, that's what they do at AlgoDynamix.
But there is a different strategy when the volatility is high. But I'm not going to tell you because this is the secret sauce.
This is part of the secret sauce. Let's move on then. Actually. But anyway, Eric, well done. Congratulations. You've got a really good, robust strategy. And once again, this is not soliciting, but obviously, your hedge fund's growing. I think it's doing well. The numbers are going up, and I think you've got some AUM targets on your website. So congratulations.
Well, thank you.
No, it's an absolute pleasure. So I think that's on that one. And just going back to our favorite one, the Bitcoin one, because it's the oldest one. I think it's the more robust one. But you got some thoughts about Bitcoin specifically, Eric? Or what is it? Yes, go. I want to hear everything. Yes.
Yeah, I have. It's not a theory, but I truly think that Bitcoin. Well, first of all, let me say this. I truly like Bitcoin. I have Bitcoin. I think it's just a fantastic technology. What was done by very smart people. That's number one. Now, what I quite often see people ignoring about Bitcoin are those points that I would like to lay out here, or in address. Is I truly think that Bitcoin is going to suffer a correction within 15 to 25 years, which is a generation gap, I would say, a generation time frame, better saying, a time frame generation. And here's why. First, for premise number one, Mr. Satoshi in his people, his group, he's a group. I say he is a group. It's kind of weird to say, but it's a group of people. First, it's a group because money is a contract, is a ledger between two people. It's an agreement between two people. That's number one. And Bitcoin was designed to be a ledger, a ledger. So Satoshi, to validate his theory, he had to transmit Bitcoin to Mr. Feeling, or if I'm not mistaken, his last name. He's deceased. He's
okay. Was that first? Was that the first transaction then? Was that the first?
Yeah, yes.
Okay.
So he has to have someone to accept the first Bitcoin as a valid money. Let's put quote unquote money. Okay.
Yeah.
Does that make sense? Okay. That's premise number one. He had to have he has to be a group of people accepting that as a valid money.
Yeah.
Okay, this is number one. So it's a group of people. So Satoshi created, however, a few people validated the idea. So it's a group. That's number one.
I agree. I agree. It's more than what. Yeah. Okay. Good.
So this is number one. Number two, Satoshi and in the initial group, they're people. They're human beings. They're eventually they are gonna die. They're not monks. Yes. They don't live in monasteries. They have wives. They have children, or perhaps they have more than one wife. Okay, the odds that they have been divorced are probably 50-50. Okay, which is the normal.
It is. Yeah.
So they perhaps they have trusts. They have normal contracts. They have attorneys involved, and the beauty or that wonderful idea, which let's assume that beauty that they have this noble idea. Okay, the noble idea will not pass to the children, which usually doesn't happen. So we'll have a situation where one or more of the children will fight to, if not Satoshi, but one of the let's say Satoshi has two children, okay? Yeah. And Satoshi dies. And Satoshi also has one wife or is divorced or something. And which is the odds are 50-50, okay? That he has a wife, is divorced, and it's 50-50, it's a lot, okay? It's just a lot. Yeah. And this guy's worth hundreds of billions of dollars.
I think if you do the maths, actually, is it 8% in the Satoshi? I don't know what the numbers are, but it's hundreds of billions, right? Yeah.
He has 1 million Bitcoin.
He's got 1 million. Oh my God. Okay.
1 million.
Okay. Madness.
So that validates my premise that he's not a monk.
Well, he's a very rich one if he is, but okay, that's it.
No. So he's not a monk. Yeah. He's not a saint, and he's hiding himself. He hasn't disappeared. He's hiding himself. He's like going to look at the analogy here.
Yeah.
Listen to the analogy. You go back to Genesis.
Yeah.
Adam and Eve.
Oh, okay. Yes.
They committed the original sin, and then God goes and go look for them, and they go, Adam, Eve, where are you? Yeah. They're hiding themselves because they did something. And now they have to handle that.
Okay.
Now, then let me keep going, okay? Because
at some point, Tarun's going to jump in, Eric. But okay, I think I love. So go, Eric. I think you're definitely on a good train of thought here. Yeah.
Yes, in because there's more to unveil. Mr. Satoshi and his group, they hold a lot of Bitcoins. So they will have the problem of passing that large sum of Bitcoin to their children. And the children, most likely, they don't have the same noble ideals that the father currently has. They probably want to buy.
That's the risk, isn't it, Eric?
That's the risk. They will sell the Bitcoin. They want to buy a house in Hamptons. They will want. They will. I want to buy a penthouse in Manhattan. I want to just give all to the poor, or do I don't know. But I bet they want they it's completely different
to what the original. Yeah, I agree, Eric. I was going to throw in that they'll buy the whole sports car at full price too, right? I think that they'll buy the whole lot if they're not careful, right?
I want to buy a soccer team. I want to.
That sounds familiar. Let's not go that direction, okay? Eric, listen, we got some questions lining up. I think it's going to get extremely interesting. But first things first, let's take a short break here. And Tarun, if you want to sort of briefly sort of give us an overview, actually, sort of break things up, because I think Tarun, you've seen everything now, and I think you've seen Eric, you've seen everything else. Just let us know what you're seeing from your end, Tarun, on the business side.
Yeah, thank you, Jeremy. Yeah, we're very busy. Huge demand for our crypto analytics across the globe. We've been onboarding a lot of new clients who are starting, actually, incidentally, crypto funds. Surprise, surprise. Well, firstly, thank you, Eric, for co-hosting today's podcast, and welcome to the AlgoDynamix family. It seems like there are a lot of new people who have signed up for this month's podcast. So I'll just quickly go over, give you a brief overview of the company and talk a little bit more about some of our businesses here at Algo. So for those of you who are tuning in for the first time, AlgoDynamix is a UK-based data analytics company. We specialize in providing price forecasting for the financial markets. We cover major asset classes such as crypto, commodities, equities. On the crypto side, we have analytics for all of the major cryptocurrencies from ETH, Litecoin, Ripple, Bitcoin. And on the equity side, we have analytics for most of the global indices and also for the large US liquid big cap names such as NVIDIA, Apple, Tesla, Microsoft. And if you wanted access to our analytics, if you wanted to try out our software, we still offer the 3-month trial package. I talk about that package on basically every podcast. The total cost is $3,500 US, and it entitles you to get analytics for 10 cryptocurrencies if you're trading crypto, 20 stock symbols if you're trading equities. It's a pretty comprehensive package. We also offer some additional services within that package, such as support, backtesting, historical data. We provide some trading ideas and also portfolio construction if you're interested. And after trying out our software, if you want to take the next step with us, we also co-launch new hedge funds, similar to what we're doing with Eric. Where we basically build you a ready-made investment portfolio. It could be an equities portfolio, commodities portfolio, crypto portfolio, or a hybrid portfolio, which is in demand right now from a lot of our clients. And basically, you can take that portfolio, market it to potential investors, charge them a fee, and we split those fees with you. So if you wanted some more information about, how to get started with us, in terms of, buying our software, starting a fund with us, you can just reach out to Jeremy or myself. Jeremy at AlgoDynamix.com or Jeroen at AlgoDynamix.com. Also, just some quick updates about some of our fund partnerships globally before I throw it back over to Jeremy. In Hong Kong, we have started a crypto fund with Jacobian Capital. They're up and running. In the UK, we have a partnership with Dylan. I believe he co-hosted one of the podcasts a couple of months ago. He started a new asset management firm called QStrat. He'll be launching a variety of funds, including a crypto fund. We also have a crypto basket that's trading live on Solideye, which is a UK crypto exchange. In Silicon Valley, we still have our R42 fund. It's an equities fund that tracks the S&P 500, basically trying to outperform the S&P using our analytics. Eric has his long-short crypto fund. And also in Saudi Arabia, we have a new partner, an emerging fund manager that will be launching an equities fund with us. So a lot happening on our side. And just reach out to Jeremy or myself if you want some more info about the fund partnerships or our software. Back over to you, Jeremy.
Brilliant. Thank you. Thank you, Jeroen. Just to sort of emphasize that, a bit like Eric, everybody's using it in very different original ways, which I find absolutely fascinating. So yes, the software is the same, but I think, the use cases and the implementation are very different. And from the person in Saudi Arabia, soon to be a family office, they wanted, so US equities, that's fine, cryptos, that's fine. They also wanted technology stocks within the quantum space, so that there's a few smaller caps quantum actually. So we're adding now some quantum equity companies for our Saudi Arabia customers. So absolutely fascinating from the product side actually about what we're doing with our software. So good. Right, Eric, it's not over. Don't worry. You're in high demand. There are questions. So I've got some more questions, but I think we'll take it actually. So I'll just read through the comments slowly. So Cart from Global Cambridge. Yes, thank you. Thank you, Cart. Always a pleasure having you. So Frank Sortino, very, very renowned actually. He's also one of our customers on the equity side. Eric, I think that question's probably for you actually. So Frank's asking, I think of currencies and crypto as being very similar. Eric, do you agree? Do you disagree about similarities between currencies and crypto? What's your view?
I think, without due respect, Mr. Professor Sortino, it is slightly different, depending on the crypto.
Because the question, yes, but careful, Eric, because I'll throw in stable coins if you're not careful, right? So
correct. And also the Bitcoin could behave similar to a currency.
Yeah.
And then if you go down the list, they can behave similar to technology companies or so forth, So if you in general, I don't see as currencies behaving like currencies. But if you look in particular current cryptocurrencies, yes. Yeah. Does that make sense?
Interesting. It's a slightly complicated. It's nuanced, I think, isn't it?
It is because if you look at Bitcoin, it could behave like a cryptocurrency. Could behave like a currency. Maybe Litecoin.
Litecoin. Yeah.
Maybe Bitcoin Cash. Sometimes.
I think there's probably additional confusion actually, because from a regulation perspective, which is also quite indicative, in Hong Kong, we know that from our customers, that they're definitely called cryptocurrency, so that is confusing. They're specifically called it.
Yes, it is. They are similar. Yeah, but short answer, yes, they're similar. but the behavior it could differ. Yes.
Yeah. So price action, I think that one, and I think if I'm not mistaken, Eric, depending on the crypto in the US, they could be classified as a commodity. Is that correct?
That's correct. So they classify Bitcoin, Ethereum, or Ether in Litecoin, in Bitcoin Cash as commodities.
Commodities, yeah, that's interesting actually. So maybe we could stick to that definition, right? Which I think it sort of makes sense actually. But yeah, it's a new emerging world.
Oh yeah, it's been changing. It's been just changing a lot. I was actually with the Security and Exchange Commissions here in Fort Worth with a commissioner, Heiser, and she was. I was invited to the round table.
Ooh, nice.
Yes, and I was. But anyway, I was just to speak with the a different project, but anyway, it's they are pretty open to now. They are open to.
No, it's good actually. Let's not sort
crypto.
of get. Yeah, it's been sort of recent change. I'll briefly give a very short UK perspective, and then we can move on to some more questions. I was equally privileged, Eric, a bit like you, actually being invited to these roundtables, and unfortunately, UK situation is not as open actually, which is a bit disappointing. So
Oh no.
I think you're in the right place, Eric, in the right time. So well done again. I think on that one. So good. Let's just go through the questions. Question from JT. Whoa, nice one. Eric, any view on the Binance coin, the BNB, or any thoughts or no comments? Or yes,
I don't have. Unfortunately, I don't have any view on BNB.
no, that's fine. Same here. We cover it on our software. I don't think anybody's asked for it actually. So it's let's see how they go. Actually, I guess it might still be one of them. It probably is a major still, right? But it's just different audience. It's just different that way. So I think that's on that one. So, but by the way, there's a poll going on, Eric. So we asked the audience a question. So the question was, do you believe Solana will surpass XRP? So do you think Solana will overtake XRP? So within 1 year, only 33% believe of the audience, and 66% believe it's going to take more than a year.
You see, but they still believe.
They still believe actually, but maybe a third option would have been never. But I think we gave them two options. So so a third think that Solana will overtake XRP within the year.
Yes, and I appreciate Professor Sortino about the talking about my fascinating philosophical dissertation.
Oh, about the Satoshi. Yes, definitely.
And I would have more to say, but I don't think we have time. But
I think we're slowly running out. But it's a general comment, by the way. We are working with the high net worth and the family offices. It doesn't pass down generation, Eric. I absolutely agree, and I've seen this over and over again.
And there's I would be fast, I would be quick, but my final point is about this, just to clarify that people don't get it. They are moving in coordination. This same group, the Satoshi group, they are moving in coordination to push Bitcoin to be adopted by major countries as having Bitcoin as a state reserve. That's the final push. That is the final push. Okay.
Actually, I've got one for you. Actually, Eric, especially with your Brazilian heritage there, it's been problematic in some of the Latin American countries, right? Which may or not, but inflation. So I think it's a whole new chapter, but do you want to comment on that about how good Bitcoin's been?
Well, I can comment on only on Brazil.
Yes.
In Brazil, it's kind of I would say liberal in terms of crypto.
Yeah.
Okay. So if you were to have a DeFi project or a DeFi application, and people use crypto very, freely.
Yeah.
So Brazil is still okay.
But it's I'm assuming, only comment. I don't know about, it's not my, but I'm seeing regional variations like we're seeing across the globe, right? Eric, every country seems to be a bit different on this matter, which is a bit annoying.
Oh, yes.
I think. Yeah.
Oh, yes.
That's what I thought.
Yes.
Fascinating. Okay, everyone, this has been absolutely fabulous. It was supposed to be 45 minutes officially, but there's too much excitement here, so this is absolutely good. Reminder again, recording will be available. And Eric, just closing off on that one. So obviously you are growing your fund, everything is going well, and within reason and non-solicitation, obviously, so that people can reach out to you for further information about the hedge fund, obviously.
Absolutely. You can reach out about the fund, ask about the fund, and also ask about my DeFi projects that we were.
That's probably a separate chapter, actually. We did do that one. Okay, there we go. Right.
But call your number on the screen.
Well, no, you don't want to know.
We cannot do that. Yeah, but
don't do that. Actually, once again, everybody, it's accredited investors only, right? We need to take this. Eric, I'll put your email in the chat box too, actually. So,
thank you very much thanks for having me. It was
thank you.
Well, your audience is just a great people. They've been sending me messages on LinkedIn. Just great people. Great people. Now I feel like I'm kind of part of Cambridge now.
Honorary Cambridge there. Well done, Eric, actually, on that one. It's the last. I've seen this actually. I think we've both worked in traditional finance and crypto finance. It tends to attract different audience, I would say, different mindsets, different philosophy with crypto, which is refreshing. I think it's been my experience.
Yeah, but thank you very much for inviting me and having me. It was a pleasure, and I'm looking forward to have another one if you invite.
We're going to need some updates. I think we're going to need some updates soon, actually, in that one. So. Okay. Once again, Eric, thank you. Tarun is always good. Thank you for the updates. Audience members, very good question. I said that there will be a replay, and we should have a R42 AlgoDynamix event in about 10 days. And this time next month, there should be another podcast. We are finalizing the details then. So thank you all very much and have a great evening. Take care.
Thank you.